Alright, welcome to a new video, guys. Today I'm going to be talking about AT&T and Discovery's new business deal, and also go over why I ultimately decided to sell my AT&T position. It was a small, roughly 3% position on my portfolio. I'll go over some details on that and also give you guys an update on my portfolio. So let's jump into it. AT&T's $43 billion deal with Discovery will help it reduce debt ahead of costly 5G build-out. Company expects significant debt reduction by combining Warner Media assets into a separate company with Discovery. AT&T is spinning off its Warner Media business in a deal with Discovery Communications as the telecom giant refocuses its attention on its wireless business and looks to reduce its debt position ahead of its costly 5G build-out. So essentially they're getting rid of Warner Media and in order to reduce a lot of debt. AT&T will receive $43 billion for the deal, and the telecom giant's shareholders will own 71% of the new company upon the close of the deal, which is expected to occur in mid-2022 while being tax-free to AT&T shareholders. So again, correct me if I'm wrong in the comments, guys. I think if you still own AT&T when this deal closes in roughly a year from now, you will still own 71% of Warner Media, which will be combined with Discovery. So like that was one of the main reasons I owned AT&T, was for HBO Max, but they're going to be focusing on telecom, which doesn't it doesn't pertain to me as much, which is why one of the main reasons I sold it. But let's just keep going on. The spinoff marks a quick turnaround for AT&T. Essentially, AT&T got Warner Media back in 2018, and now they're getting rid of it, I believe, at a loss. Last but not least, AT&T said in a release that upon the close of the transaction, its dividend would be resized to account for the distribution of Warner Media for T shareholders, and the company would target an annual dividend payout ratio of 40 to 43% of free cash flow. So essentially, they are reducing the dividend to roughly 50% of what it is now. And honestly, that doesn't really, like me being 28, that doesn't bother me too much. More so, I will show you guys later in the video, they just really aren't growing their dividend that fast either. So like AT&T, the reason I bought into AT&T was HBO Max, growing the streaming business, and just the dividend, the stable dividend. But now they're cutting the dividend, and they're essentially getting rid of Warner Media, which owns HBO Max. So I don't know, it's just all kind of confusing to me a little bit, and I'm not a huge fan of the management and things like that. So I just got rid of it. There are some other companies that I bought. All right, you guys can see my morning trade, which was earlier this morning. I sold AT&T $207.62. So like again, it wasn't a huge position. It was like 2.5% of my portfolio. But I bought Tesla and Amazon, and I'm going to go over why I bought these two right now. Actually, let's update you guys on the portfolio. So right now, we are sitting at $7,828.21. Where I believe we're down roughly 200 or so from the last update I did with you guys. Mainly a lot of that has to do with just Tesla. Again, Tesla's right now sitting at 38.5% of my portfolio. We're down $419. Tesla finished at $577.87 for the day. In the after hours, it dropped about 1%. And to me, guys, anything under $600 for Tesla is a steal, in my opinion. Again, just to recap, we have two factories coming online this year. We have Giga Berlin and Giga Texas. Possibly the Cybertruck, if it stays on track, Cybertruck orders should be rolling out by the end of the year, if not for sure, obviously early next year. But and then we also have the Model S refresh and the Model X refresh coming out too. So there's a lot of things happening with Tesla. Full self-driving, obviously, around the corner. So a lot of catalysts coming up. And it's like Tesla's been down year to date. What are we down? 20% year to date. So I feel like if Tesla keeps driving, there's talks of big shorts coming on Tesla. So if it keeps dropping, I'll just keep buying more. So that's with Tesla. And then as far as Amazon, again, if we go to tip ranks, we can see 31 analysts are saying it's a buy. It's a strong buy. There are no holds, no sells. Again, Amazon's been pretty flat for pretty much a year now. And we have some analysts saying all the way up to, on this is a 12-month forecast, 5,500. So, I mean, the average upside is 33% upside, sitting at $4,300. And the Amazon closed at $3,232. So, enormous upside in Amazon. It is my second biggest position in my portfolio. And like, again, I did just buy a little bit more, so we have almost $1,200 with Amazon. We have $3,000 in Tesla, and then we just did get rid of AT&T just today. All right, guys, so wrapping up the video, I do want to show you AT&T's dividend scorecard along with AbbVie here. So AT&T, they've been growing their dividend for 23 years. Their 5-year growth rate is 1.83, which isn't too high. I mean, they have a very high yield, 6.63. But again, this is about to get cut in a year. I think from sources I read, it still will be roughly, I think, 4%-ish, which is still very high. And it's like, me being a younger investor, that doesn't bother me so much. I'm more so focused on the next 10-20 years. So the growth rate of this hasn't really been growing. So again, why if this hasn't really been growing, the main reason that I was looking at AT&T was HBO Max and making changes with the company that they may turn things around. But it's like, if we go to the growth of the stock in the last, so it's up 10% this year. It's down 20% in the last 5 years, and in the last decade, it's only up 0.8%. So that doesn't really interest me. Is this company going to turn things around? So if we look at AbbVie, it's just, there's a lot of uncertainty, and it's like, that's why I put my money into Tesla being my biggest conviction by far, and Amazon, which is crazy to say, but Amazon is very undervalued right now. If we go to AbbVie, we can look at the dividend scorecard. So they've been growing their dividend for 8 years, roughly a third of the time, but the growth rate is really high at 18.9%, and they still have a solid 4.5% yield. The safety is a D-, which doesn't really bother me too much. I think they'll have no issues continuing to pay their dividend, but this is still a younger, they're still considered somewhat of a, I wouldn't say a growth company, but if you look at the growth of this company, definitely a lot more so than AT&T, but they're up 29% in the past year, 10% year to date, 90%. So it's like, this company has been really growing, and it's just, AbbVie is just a solid company in my book. So just comparing those two, it's like, I'd rather put more money into AbbVie right now, and other company, Tesla, Amazon, than AT&T. There are my thoughts, guys. Update on the portfolio. Again, that's just me. I'm selling out AT&T. I bought some Tesla. I bought some Amazon, and I will definitely be looking to buy more Tesla and more Amazon. And again, with the AbbVie, there are a lot of companies that I'd rather put more money into than, like, say, AT&T, which there's quite a bit of uncertainty and just a lot of kind of chaos, in my opinion, with the company. So it could be good for a lot of people. It could be bad for some people, especially if you're older and you rely on that dividend. But again, do your own research, guys. I'm not a financial advisor. Hopefully you guys enjoyed these videos. I will be coming out with more. Please give the video a like if you enjoyed it. Subscribe if you are new here, and I'll see you guys in the next video.